Hey guys, Mark Stewart, Berkshire Hathaway Home Services, California Properties, and FreeSanDiegoSearch.com. And I'm here again with my good buddy Larry Merle and my CPA, Larry Merle. He's done fantastic things for me over the years, and so we're really lucky to have him here on today's show to talk about the home office deduction or business use of home deduction that you may be able to take advantage of on your taxes every year. Larry, the floor is yours.
Great, thank you, Mark. I appreciate you having me today. We do hundreds of tax returns every year here at Merle Gerbino. One of the questions I receive regularly is, can I deduct part of my home for my business? And we're talking about unincorporated businesses that are reported on your own individual tax return. And the answer is a resounding maybe. Maybe you should. Once we've decided that it's a good thing to do, we have a number of hurdles to overcome to get to how much we can deduct. And the first thing is, does your area even qualify as a business expense? And in order to qualify, in order for the area of your home to qualify as a business expense, it has to be used regularly and exclusively for business purposes. And regularly means regular, continuous throughout the year. It can't be used part personal, part business. It must be used regularly through the year. And incidental uses, if you use it incidentally once or twice during the year and that's all you use it for, is business purposes once or twice a year, that does not meet the regular threshold. Okay. Exclusively, as I touched on before, it's just exclusively business. If you use it part for guest room and part for office, it blows the whole qualification right there. The second thing to think about is, well, what sort of expenses are included? What can you deduct? Everybody can deduct home mortgage and real estate taxes anyway as an itemized deduction. However, when you have a business part of the house included as a business expense, then that portion of the mortgage and interest can be deducted on your Schedule C, which helps save for Social Security taxes. Other than that, you have repairs and maintenance, rent, utilities, insurance, HOA fees, security systems, and depreciation. All these sort of things you can't deduct personally. You cannot deduct personally, but you can under Schedule C. So there's a benefit there that you wouldn't get otherwise. And then third, the next question is, how do we compute how much of these expenses can I deduct? And that, 95% of the time, that gets down to a square footage of the business area we're talking about that's used regularly and exclusively for business, compared to the total square footage of your house. So take all these expenses which I mentioned, multiply them times that percentage, and that's going to be your deduction. There's a couple other simple ways to do it, more simple ways. You probably need to talk to your CPA if it's applicable for you. Again, 95% of the people will use the square footage.
Gotcha. So there's really substantial savings if you can figure out a way to qualify to be exclusive and regular.
Absolutely.
That's really terrific. So, well, some of the things may be simple up front. You probably want to give Larry a call and talk about how you can take the best advantage for your individual situation. You can find out how to contact Larry below this video at merlegerbino.com. And thanks again for coming today. It was really a pleasure having you here in another episode of San Diego Real Estate University. Have a great day.